Hello, fellow traders. 'Tis I, the Rumpled One. Wednesday, September the 12th, 2018. Let's talk trading price analysis. Yeah, I switched over to the euro yen because we saw the range of the dollar yen has narrowed. Um, so what I did was, I've been mentioning this for a while. So what I've done is I've loaded up some of my frequency distribution charts for you to see. So, high minus close and close minus low. This is what we use for the rat zone. So, for those of you just tuning in, the rat zone is 20 pips. The high of the day, current daily high, minus 20 pips, and that's the red dot. And the current daily low, plus 20 pips, and that's the green dot. Um, because if you look over here at the frequency distribution, you can see that the close being less than 20 pips only happens 23, the upper rat zone here. In other words, this part, the high minus the close, is less than 20 pips only about 23% of the time over the last 100 days. Okay? And the close minus the low happens to be 23%. Less than 20, 23% of the time. So, what that says is if you enter a trade somewhere above the red dot or below the green dot, chances are you'll be able to exit that trade by the end of the day with a profit. So you can see right here, we're below the red dot and above the green dot. So if you go back, where is the rat? I think it's right here. No, this one. Nope. Here we go. So you can see here, rat zone shows you how it worked. Right here, put in a new high. It broke out. This is the rat zone, and you can see here, you could have exited for profit. And then right here, it put in a low. It exited that rat zone, and you could have exited once again for a profit. So that is how this rat zone came to be. And I discovered it. It was just because I was looking at the pound dollar a lot, and I just noticed how these wicks on the pound dollar, they were big. They weren't small like here or like here. For the most part, you can see these wicks are pretty big. And so I wrote a frequency distribution to say, hey, I think there might be something that we can exploit on a regular recurring basis. So this basically says, over 70% of the time, price is not going to close above the red dot or below the green dot. Now sometimes it does. Okay, but usually it doesn't. So see here, it's above and below, above and below, above and below. Right here, it was right at the dot, above and below. This is close to the dot. This is like right on the dot. So that's why the rat became a very popular method amongst us Forex pirates to trade. Now, another one is the buy zone. High minus open and the open minus the low. So here on a daily basis, you can see right here, close to open is minus 8 pips. Okay, but high minus open is only less than 10 pips, about 12% of the time. And the low minus open in this case was 17% of the time. So that still says 8 out of 10 times or better, you will be able to make a profit by trading the buy zone. And let me go back here into the buy zone. So you can see price never reached it here. Price hit the buy zone here, 8 to 10 pips away from the daily open. You enter the trade short, and there's profit to be made. Now here, you enter the trade long, and if you were quick enough, there was profit to be made. Okay, in this case, let's see, you could have made about 20 pips right there. Now we can change the time frame and take a more in-depth look at that trade. Guess we have to wait for the 5-minute data to load up. So we wait. Looks like we're stuck for a while. But anyway, you can see how that works. And once again, price has to range, and it's going to range from the daily open. It's going to make a high for the day. It's going to make a low for the day. In this case, it made a low for the day, made a high for the day, and then it came back. So you see right here on the 5-minute chart, it gave you an opportunity. So right here, so it went up, made a new high. You see it failed to make a new high, came in the body, and you see that wick right there. That should have been an indication to take profit. So from here to here, somewhere between about 17 pips of profit. Not bad. Not a bad trade. Who would not like to make 17 pips of profit on each and every trade? So that is how that particular frequency distribution plays out. So you see, once again, this is all, call it mathematically or scientifically based. We have these trades here. In this particular case, this is the rat, where you can see about 8 times or 4 out of 5 times, price is going to be high to open or open to low on the 1 hour, on the daily chart. It's going to be more than 10 pips. Because the range, let's see, I guess I don't have the range frequency distribution here, but the range is going to be, in the case of the euro yen, it's going to be 50 or more, a lot more times than not. So I guess I should put that frequency distribution up. Maybe I'll do that tomorrow. Because you can use average range, but average is, to me, doesn't really work, because all you need are a couple of big ones that throw off the average. That's why I went to frequency distributions. And then finally, looking at the breakout, high minus the previous high, and then the previous low minus the low. So if you see a diamond, that means it broke out of the previous. The dot just shows you where the previous is. So far today, we haven't had that breakout. But you see, yesterday there was a nice one, the day before a small one, the day before that a nice one, a small one. Here's a nice breakout to the upside. So once again, you can see when you get the break, 75, actually in this case, what's that, 17%, it's going to be less than 10 pips. So that means about 80% or better of the time, you're going to be able to get a 10 pip profit out of that. And on the low breakout, once again, about 85% of the time, you're going to get 10 or more pips on that breakout. So when you're trading a wick zone on the upper and lower side, the breakout of the high and the breakout of the previous day's low, you can see that there's pips to be made. And once again, this is all statistically based. It's none of that squiggly line, back testing, because no, this is just hard crunching numbers. Because back test, we all know there's curve fitting, and somebody could counter and go, yeah, but you know, it could go up and go down, hit your stop and go up again. Well, that's just part of trading. I mean, you just never know. But we just know this is kind of like, that poker playing where we know pretty much what the statistics are. They're not odds because this is the past. Statistics deal with the past, and odds or probability deal with the future. But we know based on statistics what's most likely to occur. See, there's a difference between most likely versus having a probability, like when you play craps. So, there is one thing that we do know from this, and that is you need to use your money in risk management. You guys are willing. Wow, it took them almost 11 minutes to get to this screen. You were probably wondering if I was going to get to it. No, even with these trades, once again, we have to manage our risk and our money. And so we can look here quickly at the monthly chart. You can see we're still within the candle body. The weekly, we're still within the upper wick zone of the previous week. On the daily, we didn't break out, so we had a very nice reversal here. Paid off really nicely. We've already gone over the buy zone and the rat zone. And the pivot, it took out the pivot. But you can see here we have an open pivot from yesterday and then an open pivot from August and May and April. And on the price action screen, once again, it's pretty simple. One ball at the bottom, green at the line, two ball at the top, red at, actually it hasn't been red at the line yet. This line, it would be green, so we haven't had a red at the line. But you can see here how it just pays off. Or you can even forget the semaphores or the one ball, two ball, three ball. It's red at the line profit. Right here, red at the line profit, green at the line profit, red at the line profit, green. You could almost trade it every hour if you want, if so long as it hits the line. So even here, red at the line, next hour, there was profit to be made. Green at the line, next hour, profit to be made. So you can see right here, we already had a green at the line and there was profit to be made. So we'll be looking for a red at the line. So you can use the semaphore indicator or not, right there. And the sweet spots gold that I modified puts these lines out at however many pips you want them. You can change this to, I have it set for 10 pips. You can change it to 5 pips, whatever you want. Once again, using the previous day's lines and the candle color at the line, profit to be made. And the wick zone, we know price doesn't like to stay in the wick zone. It shot up here and came right back out. And for the holo, looks like we need to do a refresh here. And go back to, I think we used 15-minute. And you can see here, we had a lowest open. We had a highest open here. It went in and came back out. Once again, very nice trade. Inventory reduction bars. We had a short trigger, a long trigger, a new long trigger put in, a new short trigger put in. And we are going over this long trigger here. And it's about 6 pips of profit right now. Daily, weekly, monthly, the previous, open, high, low. You can see here, we pretty much were bouncing in here. So that would have been a loser. That would have been a loser or a scratch. Quickly, you can see here, we've had some nice movement on the tick chart. Einstein line. But remember, it's not what you trade, it's how you trade it. Go drain the banks.